joining four other countries, is nearly half of sub-Saharan Africa's job 2050. Its latest Africa Pulse report, the economic activities in sub-Saharan Africa, which grew by 3.8% in 2025, up from 3.5% in 2024, and accelerates to average of 4.4% in 2026 to 2027. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Ukeri. The pace of job creation remains alarming slow, especially in Nigeria, which is expected to account for the largest of the region's employment challenges over the next 25 years. Nearly half of the region's job challenges for 2025 to 2050 accounted for by 5 countries, namely Nigeria, the Democratic Republic of Congo, Ethiopia, Tanzania, and Uganda. The report stated that the region's working age population is projected to increase by 620 million during this period, with Nigeria contributing a significant share. Despite the rebound in growth, the World Bank warns that economic expansion is not translating into meaningful gains. A 1 percentage point increase in growth is associated with a 0.04 percentage point rise in the share of working age, including individuals with wage jobs. The report noted that sub-Saharan Africa recovery from the economic trough of 2023 has been resilient, with improved terms of trade helping to reduce external imbalances and strengthening currencies. Inflation is easing across many countries, allowing central banks to adopt more supportive monetary policies that encourage private consumption and investment. However, fiscal consolidation driven by high public debt and wide deficits continue to weigh down economic activity. Is returning to pre-COVID-19 level, but the that global trade policy uncertainty, especially surrounding the U.S. tariff, could dampen confidence and external financing, while reciprocal tariff announced by U.S. in August has lowered export rates for most African countries. The broader trade environment remains volatile. To address the job crisis, the World Bank recommends a dual strategy: creating more jobs and improving jobs quality. Higher labor income per capita can be decomposed into increase in labor productivity, employment per person, and the share of labor in national income. The report explained that improving job quality will require targeted investment in education, infrastructure, and enterprise development to raise earning per worker and stimulate inclusive growth. Without these measures, the region risks falling short of its development potential, despite promising macroeconomic indicators. The latest report follows an earlier titled Child Poverty, Global, Regional, and Select National Trend, released in September 2025, which reveals that despite global progress in reducing extreme child poverty, sub-Saharan Africa, with improvement in the last decade, with over half of children in the region still live below the poverty line at around 52% in 2025. The extreme child poverty rate in the region remained the same as in 2014. According to the report, around 1 to 5 children of today are living in extreme poverty. It estimated that 412 million children under the age of 17 were living in households surviving on less than $3 a day in 2024. The Central Bank of Nigeria has assured Nigerians of its commitment in ensuring that policies and reform already introduced will bring about much needed price monetary stability in the country. The Central Bank Governor Wale Cardoso says Nigeria have over a long period of time experienced hardship occasioned by rising inflation and monetary instability in the country. Speaking in Uyo, Akwa Ibom State, the CBN Governor Olayemi Cardoso says some of the monetary policy of the bank had started yielding positive results, as seen in the steady easing of inflation and current stability in foreign exchange markets. Cardoso stated this during the fair themed driving alternative payment channels as tools for financial inclusion, growth, and accelerated economic development. He noted that CBN is committed to needed price and monetary stability. Cardoso, who was represented by Akama Sidi Ali, the Acting Director, Corporate Communication Department, CBN, reveals that exchange rate unification policy put in place has not just reduced volatility in the foreign exchange market, but has cleared over $7 billion of verified backlog of forex forwards. According to him, the BMatch system for forex trading has strengthened the market's integrity and facilitated better price discovery, adding that the initiative was expected to improve uniformity in trading and ensure seamless operations among market participants. Cardoso highlighted other initiatives expected to bring about economic growth and stability, which include bank recapitalization, which will strengthen the resilience and global competitiveness of the bank sector, positioning it to support the $1 trillion economy. He stated that non-resident BVN to connect Nigerian abroad with some banking facilities, Nigerian Payment System Vision 2028, which is expected to accelerate digital transformation and broaden financial inclusion and minimize downtime to faster and safer transaction. Introduction of 75% CRR on non-TSA public sector deposits aimed at enhancing liquidity management and mitigating potential inflationary pressure. The CBN governor explained that to sensitize the public on the bank policies, enhance their lives and livelihood, and contribute to growth and development of the Nigerian economy. Earlier, the branch controller of CBN in Uyo, Chideka Uwobuku, says one of the key objectives of the fair was to sensitize the public on various initiatives of the bank, while also creating a platform to receive a valuable feedback that will help them improve their service delivery and policies implementation. She says she therefore pledged the branch commitment to upholding the CBN's mandate while supporting economic aspiration of Akwa Ibom State through effective stakeholders engagement, financial literacy campaigns, and seamless service delivery. The Security and Exchange Commission has disclosed the Nigerian non-interest capital market has grown significantly, reaching a valuation of 1.6 trillion naira. Director General Security and Exchange Commission Emomotomi Agama noted this during a joint press briefing in Abuja ahead of the 7th Africa International Conference on Islamic Finance Holding in Lagos. The director says the milestone signals growing investors' confidence and deepening participation in ethical finance. Let's take a listen to Director General of Security and Exchange Commission.
The Director General, Security and Exchange Commission, Emomotomi Agama, says the growth highlights the strong momentum in Nigerian ethical finance space, with Sukuk continue to dominate the non-interest market segment. It reveals that most recent Sukuk issuance was oversubscribed by more than 700%, an indication of rising investors' appetite and trust in the system's regulatory framework. The SEC boss explained that the newly enacted Investment and Security Act, ISA 2025, has provided a firmer legal foundation for non-interest financial products, enabling the Commission to register collective investment scheme and expand available instruments for investors.
Imagine a prosperous and inclusive outlook. It's a powerful call to action. It's about harnessing ethical finance as a tool to build a more resilient, equitable, and prosperous future for all Africans. Why Africa? Because it is important to be inclusive in the circumstances that we found ourselves. Being inclusive is to drive the African mission. Being inclusive is to make sure that we bring our...
He added that this year's Africa International Conference on Islamic Finance will focus on unlocking capital for African infrastructure, green and ethical investments, agriculture financing, and fintech role in transforming Islamic finance.
It is strategically positioned as we approach the conclusion of the revised Nigerian Capital Market Master Plan 2021 to 2025 this December.
Also speaking, Umar Hani Ami, managing partners at Metropolitan Law Firm and chairperson of the African International Conference on Islamic Finance 2025 Planning Committee, says the conference has become one of the Africa's leading gathering for policymakers, investors, and innovators advancing ethical and inclusive finance. She noted that Islamic financing is among the fastest growing sector of the global financial system, that ICIF continued to serve as platform for shaping its future across Africa.
And so this year's conference underscores our shared vision to strengthen the Islamic finance ecosystem, to deepen investors' confidence and support innovation that aligns with integrity and prosperity.
With rapid expansion of Nigerian non-interest capital market and growing investors' participation, stakeholders says ICIF's 2025 could mark a turning point, positioning ethical finance at the heart of Africa's economic transformation. The Director General.
That was the Director General of Security and Exchange Commission, Agama Emomotomi, giving an insight into the conference coming up, the ICIF in Lagos and the Nigerian non-interest capital market. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we x-ray the Nigerian economy and the government's policies. The Federal Operation Unit Zone A of the Nigerian Customs Service has reported the seizure of contraband goods valued at more than 1.2 billion naira within 6 weeks. Comptroller Mohammed Shuaibu, who disclosed this during a media briefing in Lagos, says the seizure reflected the unit's heightened vigilance and enforcement activities across Southwest region. According to him, total duty paid of the confiscated items stood at 1.188 billion naira. It reveals that officers intercepted 5,015 bags of foreign rice equivalent to 8 trailers load along 15 assorted used vehicles, 143 bales of used clothing, and 2 jumbo sacks of used shoes and 1 sack of assorted worn apparel. According to him, the total duty paid of the seized goods stood at 1.188 billion naira. Underscoring the magnitude of the operations, the unit also confiscated 390 bottles of codeine, 310 packs of foreign branded drugs, 19 cans of tramadol, and 210 used tires. He noted that the unit's operations were aimed at curbing smuggling and upholding the 2016 federal government ban on importation of foreign parboiled rice through border. Global index provider FTSE Russell has added Nigeria to its watch list for a possible reclassification from unclassified to frontier market status. The move signals renewed confidence in countries' ability to repatriate foreign capital after years of foreign exchange challenges. The action follows the release of FTSE Russell 2025 Annual Equity Country Classification Review, which noted that FSQs and repatriation delays have largely been cleared since 2025. The decision comes 2 years after Nigeria was removed from FTSE Global indices due to acute dollar shortage that left foreign investors unable to exit the market. FTSE says the watch list status allows in-depth engagement with Nigerian authorities and market participants ahead of potential classification. The inclusion means Nigeria is now under observation for a possible return to the FTSE Frontier Market Index, a move that could restore its visibility to global institutional investors and attract hundreds of millions of dollars in passive inflow from funds benchmarked to FTSE indices. However, FTSE emphasized that reinstatement is not automatic. It depends on continued FX stability, predictable repatriation timelines, and confirmation from investors that reform are sustainable. Alongside the announcement, FTSE published its Quality of Market Review for Nigeria, which offered a mixed assessment of the capital market. While regulatory oversight and market transparency scored well, the review highlighted persistent weakness in the foreign exchange assets, transaction cost, and derivative development. In contrast, the report praised the Security and Exchange Commission and the Nigerian Exchange Limited for maintaining active supervision and improved disclosure standards. Before we call it a wrap, let's take a quick look at the stock market. The Nigerian Exchange extended its bullish run on Tuesday, gaining 92 billion naira as renewed interest in insurance stock boosted market performance. The market capitalization rose to 92 trillion naira, while the all-share index advanced 172.48 points, that is 0.1% to close at 144,995.26 points. This brought the market week-to-date gain to 1.84%, 4 weeks gain to 4.02%, and year-to-date growth to 40.87%. Market data shows that investors traded 507.4 million shares worth 24.28 billion naira in 30,665 deals, reflecting a 2% decline in volume, a 67% rise in turnover, and a 14% drop in the number of deals compared to Monday's session. A total of 127 listed equities participated in trading, with 38 gainers and 35 losers. Cornerstone Insurance led the gainers chart with 9.92% rise to close at 6.65 naira per share, followed by Consolidated Allmark Holdings, which appreciated 9.52%. Other top gainers include Charms with 9.22% and VFD Group with 9.17%, and on the losing side, Living Trust Mortgage Bank topped the chart with a 10% decline to 5.94 naira per share, while Austin Lars and Company lost 9.74%, Julie dropped to 9.6%, and Livestock Feed shared 7.5%. Access Holding recorded the highest volume of traded shares at 45.9 million units, valued at 1.19 billion naira, followed by Ella Lakes with 39.5 million shares, Chance with 30.8 million shares, and Sovereign Trust Insurance with 27.8 million shares. Performance across sectoral indices was mostly positive. The insurance index gained 1.98% and the premium index rose to 1.06%, while the industrial index appreciated by 0.69%. Similarly, the consumer goods index advanced by 0.23%. All right, this is where we draw the curtain on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms at Global TV NG. Till I come your way again, I am Kike Lomo Okere. I celebrate you all.